3 market structure analysis indicators currently trending on Tradingview. Let's break them down and see exactly what each one brings to the table. Volumetric Supply and Demand, published by Boss Waves, identifies supply and demand zones using swing pivot detection filtered by an impulse size requirement, then populates each zone with a volume distribution profile and a delta profile. Rather than a plain-colored rectangle, each zone contains a breakdown of where volume was concentrated and whether activity inside it leaned toward buying or selling pressure. Zone creation requires the pivot to be followed by a price move clearing a configurable ATR multiple, defaulting to 1.2 times ATR. Small, sluggish pivots that fail to produce a meaningful departure are filtered out, because a legitimate supply or demand zone should be left behind by a strong move away from it. Once a zone is confirmed, the indicator looks back across a configurable number of base candles to define the boundaries. Zone height is capped at a maximum ATR multiple to prevent excessively wide zones forming during high volatility periods, which would reduce their usefulness as precision reference levels. The volume profile divides each zone into up to 30 rows and distributes historical volume proportionally based on candle overlap with each row. The row with the highest volume is marked as the point of control with a white line, and bar widths scale to reflect relative concentration. Transparency decreases as volume density increases, making the most traded price levels immediately visible. The delta profile sits on the right side of each zone. It uses candle direction as a proxy for buy and sell volume, allocating bullish bar volume to the buy side and bearish to the sell side. This is a candle-based approximation rather than true tick-level data, but it adds directional context that a plain volume profile cannot provide. Zone merging combines overlapping same direction zones rather than stacking them. Boundaries are unified, volume and delta profiles are summed row by row, and the point of control is recalculated. Touch counting updates the zone status from fresh to tested after the first contact, and an information box alongside each zone summarizes type, status, total volume, total delta, and touch count. In practice, the point of control is the most actionable output. Rather than treating the full zone as a broad entry reference, a trader can use the point of control as a precision level within the zone and check the delta profile to assess whether the volume that formed it leaned in the expected direction. If a demand zone shows strongly positive delta across the lower rows, that adds confidence that buyers were genuinely active at that level. The impulse filter and combined volume and delta profile give this tool more analytical depth than most supply and demand indicators, and the zone merging logic is well implemented. The delta approximation from candle direction, rather than actual tick data, is a meaningful limitation, and the indicator would benefit from a quality scoring system to help traders prioritize which zones deserve the most attention. Market Structure Break and Order Block Probability Toolkit, published by LuxAlgo, combines market structure break detection with a momentum filter and order block identification with a quality scoring system. It does not just mark zones mechanically, but attempts to weigh them by the conditions under which they formed. Market structure breaks are detected when price closes beyond the last confirmed pivot, high or low. The momentum Z-score filter is what separates this from simpler implementations. The indicator calculates a rolling price change over 50 bars, derives the standard deviation of that change, and expresses the current bar's momentum as a Z-score. A break only registers if that Z-score exceeds a configurable threshold in the corresponding direction, defaulting to 0.5. This filters out weak, low-conviction breaks and focuses attention on those carrying genuine directional pressure. When a valid break fires, the indicator looks back up to 10 bars to find the last opposing candle, which defines the order block zone. The top and bottom of that candle set the zone boundaries, and a point of control line is drawn at the midpoint. Each zone receives a quality score between 0 and 100. The score combines the absolute Z-score value scaled by a factor of 20 with the volume percentile rank of the break bar measured over a 100-bar lookback. Zones scoring above 80 are classified as high probability zones and rendered in a distinct teal color for bullish and red for bearish, making them immediately distinguishable on a crowded chart. Order blocks remain active until mitigated. On mitigation, the block either disappears or turns gray, depending on whether the display mode is set to present or historical. Historical mode shows where price has already been, and whether respected zones formed clusters at meaningful levels. Present mode keeps the chart clean for live decision-making. The overlap detection option suppresses new order blocks that fall within the price range of an existing unmitigated block, preventing redundant zones from stacking in the same area during trending conditions. The dashboard shows a reliability percentage from the ratio of mitigated blocks to total blocks formed, and a count of currently active high-probability zones. If the reliability figure is climbing, a high proportion of order blocks are getting tested, which validates the detection methodology on the current instrument and time frame. The most direct strategy application is using high-probability zones as entry areas on pullbacks, following a confirmed structure break. A bullish break with a high-scoring order block left behind gives a defined zone to watch for re-entry, with the point of control as a precision reference for positioning. The Momentum Z-score filter applied to structure breaks is a genuinely useful addition that separates this from purely mechanical order block tools. The quality scoring system gives traders an objective basis for prioritizing zones rather than treating all blocks equally. The dashboard feels underdeveloped relative to the depth of the underlying logic, and the session and overlap features feel supplementary rather than integrated into the core concept. Market Structure Dashboard, published by Flux Charts, consolidates several layers of price analysis into a single overlay table that updates bar by bar, giving traders a compressed but detailed view of what is happening across 7 configurable timeframes simultaneously. It tracks 5 dimensions per timeframe: EMA trend direction, swing high and low positioning, market structure labeling, order block proximity, and fair value gap detection. The swing position display renders a visual bar showing where current price lands within the swing range, and flags liquidity sweeps when price dips below or pushes above the boundary before reclaiming it. That adds a layer of nuance most structure tools skip entirely. Structure labeling follows the standard higher high, higher low, lower high, lower low sequence, tracking the last 3 confirmed swing labels and overriding them in real time when price breaks a prior pivot before a new confirmed swing forms. Order blocks and fair value gaps are tracked for proximity. The dashboard tells you not just whether a zone exists, but whether price is currently inside it and how far away the nearest unmitigated zone is. That distance displays in percentage terms, raw price, or pips, making it functional across asset classes. Below the multi-timeframe panel sits a current timeframe section covering volume state, volatility state, and swing range position. Alongside that, the market context panel handles session identification, ICT-style kill zone detection across 5 windows, and a weighted trend bias score that aggregates directional signals across all enabled timeframes into a single label, ranging from bearish through to bullish, with lean states in between. That bias engine works by assigning weights to each timeframe. Traders can configure which factors feed into the bias calculation, choosing any combination of structure, order blocks, fair value gaps, EMA, and swing position. An optional HTF level section surfaces previous day, previous week, and previous month high and low prices, as both dashboard rows and plotted lines on the chart. The most practical application is top-down confluence stacking. A trader might wait for the daily and 4-hour timeframes to show aligned bullish structure with a nearby bullish order block, then drop to a lower timeframe for an entry trigger when the bias panel confirms the same direction. The kill zone column adds timing awareness, and the bias score gives a quick directional summary without needing to scan each row manually. The alert system covers swing breaks, sweeps and reclaims, structure bias changes, price entering order blocks or fair value gaps, EMA trend flips, volume and volatility state changes, session and kill zone transitions, trend bias shifts, and all 6 HTF level break and sweep combinations. Traders can run this without watching the screen and still get notified when conditions change across any monitored time frame. The combination of multi-timeframe structure, zone tracking, and a weighted bias engine in a single panel is genuinely useful and not trivially replicated. The alert system is one of the more complete implementations available on the platform. The indicator is data-heavy and requires the user to already understand institutional concepts to extract full value from it, which narrows the accessible audience somewhat. We have recently introduced the complete QR Pro BST ecosystem, one workflow, 3 tools: backtest your settings, scan for opportunities, and trade with confidence. Link in the description if you want to see how it works.